Thanks, Nadine, for that introduction. Thanks to Payments New Zealand for the opportunity to speak today. I probably don't thank you for the wonderful bottle of Pinot last night. My head's a little bit sore, but we'll move pretty quickly through this. I'm head of Oceania. I'm here to talk about collaboration and competition in cross-border payments. Just a few words on Swift, though. Swift is an industry-owned, not-for-profit cooperative. We provide messaging services to the global finance industry. We were established some 40 years ago by the banking industry to solve the problem of cross-border payments, which were basically telex-based at the time. So we provide to our community a platform for messaging, standards for communicating, and products and services that facilitate integration with that network and connection to the network. We have shared services that in the reference data space, business intelligence products, and products that help our members meet their regulatory compliance burden. We have 11,000 endpoints on the network, so that covers banks, securities firms, market infrastructures, and corporates, and around 3,000 of those members are located in the Asia-Pacific region. And we have global presence. We're in pretty much every country around the world. Industry-owned cooperatives are a pretty unique beast these days, and Swift's a great example of a cooperative success story. Just a few stats on Swift. So our core messaging service is the Fin service, and in 2017 we exchanged 7 billion Fin messages across the network. When we look at payments messages, which is a portion of that, and around 50% of our messaging is payments related, we experienced 12% growth in 2017 for our payments business, and that double digits growth is fairly common for Swift. We estimate that every 3 days the global GDP flows through our network, so that's $80 trillion US. So you can imagine with that level of criticality, we have some interesting oversight with the G10 central banks, and we need to really focus on the security and the reliability of our network and its resilience. The network's fast, so it on average takes a couple of seconds to sign, encrypt, and send a message from one side of the world to the other. And our members benefit from economies of scale, so they use that same connection to Swift to access their global partners, and then as the network reach increases, we're able to reduce the cost per unit. And remember, we're not a not-for-profit society, to the point where it now costs on average just a few cents per transaction for our members. But we're not just in the cross-border space. Swift moved into providing domestic services back in the 90s with the advent of RTGS systems. And then with bulk payment services, our members wanted to reuse the Swift connection that they had for those types of services. And as you heard, we recently moved into real-time payments with what we've done with MPP in Australia, plus other things we're doing in Europe. And in New Zealand, we see a really great supporter of Swift. In fact, New Zealand's probably one of Swift's most penetrated markets, and that's because we support the 3 most critical systems that support the New Zealand economy. The ESAS, High Value Payment System. Pretty much all transactions for that service go via the Swift network, come via the Swift network. The NZ Clear Securities Depository and the SBI Bulk Payment Service. All 3 of those services, predominant way of connecting to them is via the Swift network. Cross-border payments, clearly that's still an important purpose for Swift, and New Zealand sent 9.5 million messages in 2017, sent or received, worth 31 trillion New Zealand dollars. And just some other stats, 38 users in New Zealand, predominantly using it for payments, so 65%. And those 2 critical payment systems, around $30 billion a day is sent through ESAS, and in 2017, $1 trillion through ESAS, and all of that came via the Swift network. So critical service provider to the New Zealand market. Now, just moving on to a question that I get asked quite a lot, is correspondent banking about to be disrupted? And I first want to start by looking at this notion of disruption. I think along with blockchain, disruption is probably one of the biggest buzzwords to enter our vocabulary in recent times. And if we look back to, I guess, where it came from in the business sense, an American academic, Clayton Christensen, coined the term disruptive technology back in the 90s. But he later revised that term with and replaced it with disruptive innovation, because he recognised that although the technology is an enabler of disruption, it's the new business model that is the disruptive force. So if we look to examples that we're familiar with, the Uber and Airbnbs of the world, Uber competes with the taxi industry, but they don't actually own cars or employ drivers. Airbnb competes with the hotel industry without owning any property or employing any hospitality staff. So it's a different business model that is the real game changer. If we apply the lens to correspondent banking, for me, to truly disrupt correspondent banking, an alternative is going to need to tick these 5 boxes. You're going to need to have reach. You need to be able to access all bank accounts in all countries and currencies. We need a viable alternative to the Nostro-Vostro settlement mechanism. It's going to need regulatory support, so regulators know and trust the existing system. Of course, the cost to implement this new system needs to be justified by cost savings compared to the current system, and customers are obviously going to need to see a superior service through whatever the alternative is. So if we look at, apply those rules to correspondent banking, is it being disrupted at the moment? I don't think so. That's my opinion. I don't think it's happening. Maybe it's more of a not yet, but certainly not at the moment. However, are we seeing competition in cross-border payments? I think most certainly it's never been more competition in cross-border payments. So let's have a look at that. So here we have a model depicting a typical cross-border payment. There's multiple banks involved in the process. We have a corporate or an individual in one country who needs to make a payment to a corporate and individual in another country. They may approach their local payment service provider or local bank to make that payment on their behalf. The local bank does not have the global reach needed to get to the end beneficiary, so they're relying on a global transaction bank or their banking partner within their country to do that offshore payment for them. They might use the RTGS system or the ACH in country to make that payment to their global transaction bank. And that global transaction bank will use their correspondent banking network to move the funds offshore, and the whole process can be repeated on the other side. Now, this process is reliable, trusted by customers and regulators. Oh, I've gone too far, sorry. And this process is reliable. It's trusted by customers and regulators, and it allows you to get to any account in any country. And a lot of people think that Swift has a monopoly on this type of payment, but we don't really have a direct competitor. But whilst it may be fair to say this for the wholesale settlements that occur between financial institutions, it's certainly not the case for the underlying customer payments. In fact, the reality is there's a lot of competition in cross-border payments. Banks and their customers have been utilising services provided by various payment providers for many years now. While some of these names are relatively new, many of them you will recognise as being around for a very long time. At the end of the day, customers will choose a service that's best for them. They'll make this decision based on a number of factors, but it almost always comes back to convenience, cost, trust, customer service, and ease of use. And there's room for multiple players in cross-border payments. There will always be providers who will find a new value proposition that will attract customers to their offering, and competition is a good and healthy thing. So how is this competition driving change in the way cross-border payments work today? Let's take the example of a company exporting goods to New Zealand. The company in New Zealand obviously needs to pay for those goods, and they'll typically use the correspondent banking network to make that payment. And during that process, a number of activities are performed. There's compliance checks to ensure that parties to the transaction are not on any sanctions list, and various other AML and fraud checking processes. The payment may be dependent on trade documents or other documents being exchanged to satisfy local regulatory requirements. There may be an FX conversion or other fees deducted along the payments chain. And banks will need to ensure they have adequate liquidity to cover any large value payments. And of course, there's the reconciliation processes that need to occur, which may be difficult if the remittance information is incomplete or has been altered. Now, all of this is friction. And from our perspective, It's business process friction that is the main issue here, not an issue with the underlying technology. So let's move to GPI. With the GPI program, banks and Swift are partnering together to address many of these points of friction. What is GPI? Well, the aim of GPI is really in phase one to target these main customer pain points. The speed of payments, so customers complain that it can take more than a day or multiple days for a payment to reach the end beneficiary. Once they send the payment, they don't know what's happened with the payment. There's no ability to track the payment. Transparency on fees. Who has deducted what along the way? They have no way of determining this easily, and that's lack of transparency to the whole process. And remittance information. The quality of the remittance information makes it hard for them to do automatic reconciliation. And how have we achieved what we've achieved? Well, as I said, it's a partnership between banks and Swift. From the banks part, they're all subscribing to a new business and technical SLA for the processing of cross-border payments. On Swift's side, we've focused on developing 3 new central services: the tracker, the directory, and the observer. But I think the key to GPI is not about this one-time effort. It's about creating a new platform that will allow for future innovation on top of this new set of core features. So how have we built this platform, and what will it look like? So first of all, you need to start with the core service. And in terms of the components that Swift has built, the tracker is a central cloud-based database. It's accessible via messaging or APIs. The tracker can tell a bank if their customer can tell a bank and their customer info such as where the payment is, the fees that have been deducted along the way, and the overall transaction times. GPI banks and Swift will update the tracker with information as the payment progresses on its path. The GPI directory provides operational info on GPI members to help them determine the best payment routes. So that's things like BICs, members of the GPI service, the currencies that they cover, the cut-off times. And then finally the observer, which is kind of like the policeman of the system. It shows who is complying with the SLA, who is achieving the best results, so that banks can make decisions for their customers based on performance. A key feature of GPI is this introduction of a unique payment tracking identifier. It's kind of like a DHL number where you can give your customer the UETR and they can do a search online and see exactly where the payment is. That's the concept that's been introduced with GPI, which is a key component. And what does the tracker look like? Well, this is a screen from our test environment. Basically, you see at the top the total amount of the payment, any deductions that have been taken out of the payment, and then in this particular example, there are 4 banks involved in the payment, and it gives all the details around when the payment was received, when they passed it on, any fees that they themselves have deducted. And this information is critical for a bank, their own inquiries teams, but also for the end customer. The next step is really to focus on things that reduce costs, because when there's a lot of competition, it's always going to put a downward pressure on fees. So banks need to find new ways to save cost, but also new value-added services that their customers may be willing to pay for. And there's some examples are the implementation of APIs on the tracker and the integration of bank systems into that central tracker service via APIs. It provides them with a more interactive service and services that they can then provide back to their customers through their own customer end channels. Stop and recall payments. So in the past, if you needed to stop a payment, if a fraud was suspected, or maybe it might be a duplicate payment, you would need to send a message, and the banks involved in the process would need to pass it down the chain and hope that that stops the payment in time. But with this functionality in the tracker, you just basically say we want to stop the payment, and Swift will not allow that payment to continue on its path. If the funds have already been credited to the end beneficiary account, then there's a recall functionality that helps automate that process, but at the end of the day, it comes down to local jurisdictional rules in terms of whether those funds can be recovered. Another example is integration of this new information from the tracker directly into corporates' TMS and ERP systems. And now there's a pilot group underway with some of the largest global banks and large global corporates to determine the best way to do that. And that's a value-add service that banks are looking to provide to those corporates. We're also gathering requirements for an international payments assistance service that will allow banks to do a pre-validation of the payment before they send, to avoid costly repairs and rejections of payments because of incorrect information that's been put into the payment message itself. And that's just showing some banks have already integrated the tracker into their own customer front-end channels. Some example of banks that have done that. Another key to the success of GPI is going to be this facilitation of overlay services. We heard that that's a key concept in the MPP space for new services being deployed well into the future, and that's another key for the GPI program as well. We see GPI as a way of bringing FinTech and banking community together. By exposing the central tracker and other reference data products through APIs, we're hoping that that will stimulate the FinTech community to propose new services that will assist the banking community well into the future. In 2017, we ran an innovation challenge in Singapore, and FinTech companies from around the world were invited to come to put forward their ideas. 5 finalists were selected. They came together in Singapore. They worked with the GPI banks, with Swift to work on their ideas, and then at the end, two were selected as the winners. We had Access Pay from the UK, who proposed a solution to assist corporates with their accounts receivable forecasting. And the other winner was Assembly Payments, an Australian FinTech company who proposed a request to pay service. So we're working with both those organisations now to bring their ideas into reality. And then finally, we can't ignore new technology. We need to explore the technology and apply it where it makes sense. And this is something Swift is doing much more broadly than just GPI, the GPI program. And we've really focused on 3 areas: APIs, artificial intelligence, and blockchain DLT. In terms of APIs, it's around standardization. So as these open banking developments kick off around the world, we want to make sure that they incorporate the ISO 20002 data sets as much as possible, and we standardize the way that these APIs are deployed as much as possible. We want to expose more of our own products. So we have the tracker, we have reference data products that are accessible via APIs, but we want to do that for more of our products. And we want to allow third parties to deploy their APIs over the Swift network, maybe addressing some of the security issues that are raised as concerns. Artificial intelligence, we see great use cases in fraud detection, reference data, and payment message pre-validation or repair. On the blockchain front, we're looking at how we can evolve our own platform to perhaps be able to host blockchain nodes on the Swift network. We're looking at providing thought leadership. We've got a sandbox for third parties, and we've run a number of proofs of concepts. So we did one on proxy voting, standard settlement instructions, and probably most famously the one on Nostro real-time reconciliation, which is the one on this slide. So the use case here seemed to make sense. It was, can we use DLT to provide a better solution for the way reconciliation is handled? At the moment, it's more of an end-of-day function where we check that my ledger matches your ledger. But also, liquidity management is difficult as well because organisations don't know their cash balance unless there's a lot of messaging that's going between the 2 organisations. So the idea of having a central or a shared ledger that is updated in real time seems like a great use case for blockchain. So it was, going the wrong way again. So it was at the time, I believe, the biggest blockchain initiative globally. There was 34 participating banks in the initiative and 28 in active testing. We used Hyperledger nodes deployed in Swift's DLT sandbox. I encourage you to read this report that's available on swift.com through the link provided there, which you'll get in this pack. I mean, in summary, it did prove that blockchain is a good technology to help address some of the issues with this business problem. It did show that there has been significant progress in terms of the technology itself. But there still needs to be some areas addressed, particularly around scalability, especially if you're looking to deploy something in a global mission-critical system. Then, yeah, there's still some work that needs to be done there. Banks themselves need to move from a batch mode to a real-time mode. That is a key thing that needs to occur before we can move forward with this particular solution. And we think that the further adoption of APIs and ISO 20022 by banks will help with that integration effort to help them link back office to real-time ledger update. So it's still some way to go, but very promising results. Yeah, we're not quite there yet. So finishing off with GPI and looking at the stats, how successful has it been? Well, it's only been a little over 2 years since we launched the service in Singapore in Sibos. The take-up's been incredible. I think it's been actually the fastest moving program we've ever seen at Swift. We have a large community that's signed up to the service, 180 banks, including 49 of the top 50 banks globally. 200 countries, so pretty much every country in the world's involved. In theory, those 180 organizations cover 80% of Swift's payments traffic, assuming they implement all of their BICs and all of their currencies. Already we have 60 banks live, covering 450 country corridors. 35 million payment messages have been sent using GPI since launch, and around 400,000 messages a day, already covering 25% of Swift's MT103 traffic. So incredible take-up. Nearly 50% of all GPI payments are credited to end beneficiaries' accounts within 30 minutes. And more than $100 billion a day is being sent via GPI. Importantly, banks are reporting a significant drop in inquiry costs, up by as much as 50%, because payments are arriving more smoothly, more quickly, and there's less to investigate, plus their own self-service capabilities that they're giving to their corporate customers. And great positive reactions from corporates. So certainly a great start in a little over 2 years. We've got great coverage around the world with 60 banks, and I'm pleased to report that New Zealand has now gone live with ANZ, CCB, ICBC and HSBC, and BNZ planning to go live second half of this year, ASB and Westpac next year. So good to see good take-up in New Zealand starting to happen. And it's fast. I mentioned nearly 50% of payments are accredited within 30 minutes. You see here, though, that more than 90% are being credited within 1 day. So we are meeting the SLA. Those 8% that are not being credited within 1 day are for valid reasons like compliance issues or documentation issues. So what's next? Well, around the world, domestic systems are moving real time. We've heard about the Australian example, and other countries have already done that or are planning to do so as such. Swift's working with Payments New Zealand and the working group on speeding up the payment system, and I suspect New Zealand in 5-10 years from now will have a real-time payment system. So I think that it's accepted that this is a trend that's continuing. And we're seeing near real-time results with GPI. In fact, the fastest payments we've seen from Australia to the USA, which is taking 8 seconds when there's 2 banks involved, and 20 seconds when there's 3 banks involved, from the UAE to the USA via an USA intermediary. So that's getting down to near real-time outcomes for customers. So the question is being asked, does it make sense to combine the two? We've got GPI, that's the new SLA for GPI payments, and we've got real-time payment systems springing up in domestic systems. So we've initiated a working group in multiple locations. So in Asia Pac, we're focused on the countries with real-time payment systems, Singapore, Thailand, Australia, China, and we've had workshops there to determine what a new GPI SLA could look like. So an extra level of commitment that the banks can commit to, which then allows them to make commitments to their clients around speed of transaction. And the interesting thing is that banks are looking at this as an opportunity to recapture some of that lost business in the P2P space for cross-border payments as well, not just in servicing corporates. So how does it look? Let's use the example, maybe a father in Singapore needing to pay his daughter in Australia. There's some criticality around the timing of this. It's for her university tuition. He approaches his bank, who's DBS, who is a GPI member. They're using GPI to send that payment to ANZ, who's their Australian correspondent. And ANZ's doing the inward and outward payment through MPP to get to the end beneficiary bank. And all of this could happen in a matter of seconds. This is the SLA that the group needs to define. But even just the ability for a Chinese corporate to send a payment and not have to worry about cut-off times for our RTGS system is already a game changer. The banks in the workshop were very excited to hear that MPP is a 24/7 system and those types of cut-offs would not apply. So promising first steps, but we're hoping to present more on that by the time we get to Sibos. So back to the original question, is correspondent banking about to be disrupted? Now, I like Rob's analogy, is it the taxi of the Uber world? I personally don't think so. I think the industry is showing innovation the way they've responded. This is a global initiative, and we're setting up a platform that allows for further innovation on top of this as well. So get the core right, reduce cost, explore new technology, allow fintechs into the tent. I think we're doing all the right things to respond to the changing customer needs. And finally, I just want to make a plug for Sibos. It is coming to Sydney in October this year. It'll be the third time that it's been to Sydney. It's the world's biggest financial services conference. The theme will be enabling the digital economy. I think that's very relevant. There'll be 4 sub-themes around new tech and business models, information sharing to tackle financial crime, cybersecurity and increasingly digital economy, and adapting to geopolitics and regulatory priorities. Targeting over 7,000 delegates, 162 exhibitors, which is sold out, including 16 new ones. Massive Chinese bank representation, and we're doing something different this year, having the Discover Zone, which is, I guess, where all the innovation is going to be happening, and that will be a level within the convention centre which will have Swift's InnoTribe. The banks will have their own labs there and showcasing what they're doing, and then FinTech will obviously be located there as well. So I encourage you all to get across the ditch. It's not too often it comes to our part of the world, so hope to see you there. And that's it for me. Thank you.